Hey everybody, Courtney Smith here with part one of my series of videos on the outlook for 2022. Well, I was very bullish for pretty much all of last year. A couple of weeks I wasn't, but pretty much the whole year I was very bullish. But this year is going to be very, very different. Number one, the Fed is starting to tighten. Number two, we are entering a fiscal cliff. Number three, comparisons are going to be much harder than last year because we're not comparing ourselves to some extraordinary bad news in March of 2020. The economy is going to slow and inflation will continue high. 2022 will not be pretty. It's going to be much trickier to play than 2021 was when you could just buy and hold. This week, I'm going to go through some of the reasons why it's going to be different. It's going to take, I don't know, five or 6 days, something like that. One of the big problems we've got is debt is climbing to record levels. Government debt is over $28 trillion, and that doesn't count unfunded liabilities. And, of course, it's rising. Corporate debt is at record levels. Personal debt is not as bad, but it's getting bad quickly. We're close to the levels that we were preceding the 2008 recession. Just today, it was announced that mortgage debt hit an all-time issuance of $1.61 trillion in 2021. That is in addition to the many trillions of dollars already outstanding. So here's the problem. The Fed has said they will raise interest rates 3 times this year, and that's going to have several major effects. Number one, stocks will go from slightly overvalued to clearly overvalued. That doesn't mean that they will enter a bear market, but it does present a stronger headwind for future gains and makes the market more susceptible to bearish news. Number two, all that debt outstanding will now be more onerous due to higher interest payments. Zombie companies may start to go belly up. Zombie companies are companies that they're not making enough money to pay their interest and debt payments. They're going to start to go belly up. Less money will be available for government spending because it will be going more and more to interest payments. Instead, and also personal debt payments will increase, and that's going to blunt the personal spending and therefore causing the economy to slow. So interest rates are going to ripple through the whole economy. Holding cash, here's one that nobody's talking about. Holding cash will become more attractive. So that will bring cash out of the stock and bond markets, and people will just leave it in savings accounts, CDs, etc., etc. So that's going to create competition for the stock market. Tomorrow, my next video, I will discuss the upcoming fiscal cliff, which is going to be another thing that's going to be bearish for the stock market and how it will affect the various markets. Now, of course, I would highly recommend that you subscribe to my newsletter, Wall Street Winners. You can go to WSW2021.com and subscribe, and the link is in the description below. Next video, we're going to talk about Fed policy some more. Then we've got the fiscal cliff. We've got many more videos in this series so that you have a complete outlook on what 2022 is going to come and have a general overall strategy of how to make money from it and protect yourself from some of the pitfalls that I see coming this year. It's not going to be as pretty as last year was. Talk to you later.